Hold on to your hats, folks, because today the market took us on a wild ride. We saw the Dow Jones Industrial Average skyrocket by nearly 3,000 points. That's right, you heard me correctly. This surge represents a gain of almost 8%, marking one of the largest single-day point gains in its history. The S&P 500 wasn't far behind, soaring by an impressive 9.52%, its best performance since that remarkable day back in 2008. And the tech-heavy Nasdaq, it blasted off like a rocket, soaring by 12.16%. This marks the Nasdaq's second-best day ever, and its most significant leap since 2001. So what on earth ignited this incredible rally? Well, it seems the news of a trade war truce, albeit a temporary one between the United States and China, has injected a much-needed dose of optimism into the markets. President Trump took to his favorite social media platform, Truth Social, to announce a 90-day pause on some of the tariffs imposed on goods imported from China. This temporary ceasefire, however, does not extend to Mexico or Canada, and it excludes the existing 10% universal tariff applied to most Chinese goods. Furthermore, sector-specific tariffs remain unaffected by this pause. In a move that surprised many, President Trump also revealed an increase in tariffs on certain Chinese goods, raising them to 125%. This unexpected escalation in tariffs, even amidst a pause, underscores the delicate balance the administration is trying to strike in its trade negotiations with China. China, not one to back down, wasted no time in responding with retaliatory measures. Effective Thursday, they will implement increased tariffs on U.S. goods, raising them to a hefty 84%. This tit-for-tat exchange highlights the ongoing tensions and the high stakes involved in the U.S.-China trade relationship. While the trade war ceasefire certainly played a role in today's market surge, it's crucial to acknowledge the influential voice of the bond market. The recent uptick in Treasury yields, particularly the 10-year yield, which surged to 4.40%, has been a cause for concern among investors. This movement in the bond market reflects growing anxieties about potential inflationary pressures and the overall direction of the economy. The Federal Reserve's recent interest rate hikes, aimed at curbing inflation, have also contributed to the volatility in the bond market. The bond market's influence on today's market rally cannot be overstated. As yields rise, investors often seek refuge in the perceived safety of bonds, potentially diverting funds away from the stock market. The 90-day tariff pause announced by President Trump can be interpreted as a strategic move to appease the bond market and alleviate some of the upward pressure on yields. The market's euphoric response to the tariff pause was evident in the performance of various sectors. Tech giants like Nvidia, Tesla, Apple, Meta, and Amazon emerged as clear winners, with their stock prices surging by double-digit percentages. Airlines, particularly Delta, also enjoyed a significant boost, with Delta's stock soaring by over 23%. However, not all sectors basked in the glory of today's rally. Dollar stores, supermarkets, fast food chains, and dividend-paying stocks found themselves on the losing end of the spectrum. These sectors, often considered defensive plays during times of economic uncertainty, tend to underperform when the broader market experiences a surge in risk appetite. As we navigate this volatile market, it's essential to remember that today's surge, while undoubtedly impressive, does not erase the underlying economic and geopolitical uncertainties that persist. The 90-day tariff pause provides a window of opportunity for the U.S. and China to find common ground, but the path to a lasting trade deal remains uncertain. Stay tuned, folks, because the ride is far from over.